Welcome back everyone to today's video on another farm on Fantom network. This time we are taking a look at Beethoven X. So what is Beethoven X? In simple words, it is an automated portfolio manager and liquidity provider. Think of it this way. When you want to buy many alts on Fantom ecosystem, but you do not want to be exposed to price fluctuation on each alt individually. Instead, you want to buy, let's say, all the alts together and want to be exposed to the cumulative price fluctuation. In other words, you want a portfolio manager. This is where Beethoven comes in. So let me show you what all farms they have got and how you can start investing with Beethoven X. So Beethoven has got two pools mainly. First is the weighted pools, and these are the ones where the price of the tokens changes and the pools are getting rebalanced, like this one, the Grand Orchestra. And the second pool is the stable one, the stable pool, that is like a steady beats, which is over here. And in this is basically a stable pool farm, and here the price is always almost near to one price point. So you may ask, how does this self-balancing index fund work? So instead of paying a portfolio manager continuously to rebalance your funds, basically here in Beethoven X, investors do with an ETF. So you must have come across this term recently with Bitcoin ETF. So the same way it works over here, where liquidity providers collect fees as traders to rebalance the trading pools. So this works because the market actors are always incentivized to rebalance the portfolio, taking advantage of arbitrage opportunity. So as you can see, there are several pools here where you can park your crypto and earn high yield. So let's take a deeper look into some of these pools. So this is the Fantom of the Opera pool, and this is a 70-30 Fantom and 30 USDC balanced pool. So in this, if you deposit some of your Fantom tokens, let's say you deposit 500 Fantom tokens in this, so it will start generating yield as per your position, and this is the yield which you will be getting at 54 or 55%. And you will get some LP tokens once you deposit your crypto here, which you then need to take to this farm option over here, and you have to deposit. Let's say you have 100 LP tokens, you need to just put in your tokens, whichever that you have, and you have to deposit the tokens over here, and this will start gathering yield. So basically what happens is, this pool which I have just shown it to you, Fantom of the Opera, this is since this is a Fantom pool, and if you are bullish on the long-term pricing of Fantom, you may use this pool. Now you may ask me that there are some pools which is paying out very high APR, so why not go into those pools? So I will definitely explain it to you why you should or should not go into those pools. So this is the pool, and this basically, these both are the pools where you will see the APR is very high. So these basically are called the pool 2 or the native pool, wherein this protocol token, that is Beats token, is paired up with some stable coin. So basically what happens is, whenever you are investing in the protocol token, you will be susceptible to price movements that may occur downwards or maybe upwards. In most of these yield farms, what happens, whenever a player comes in and starts yield farming, these protocols start providing their native token as yield. So let's, for example, imagine that I have started yield farming with, let's say, $100,000. Okay, and Beethoven X is paying me out in their token, which is Beats. Now another player comes in and who has invested in Beats token, and they have upfront purchased the Beats token. So what happens is, now I am farming with my own crypto and I am getting rewards in Beats token, which I am continuously selling out. And the other player who has purchased that Beats token is getting dumped on. So this is what happens in these kind of pools. So don't fall for these high APRs. If you have to place degen, I will say invest with a certain percentage of your portfolio, not like invest everything in these native pools. Okay, so basically this I have shown it to you because nobody shows such things or tells you such things in crypto, because they don't want their yield to be killed off. But I wanted everyone to know how these yield farm work and how protocols are providing or giving rewards to their users. Now let me show you. This protocol also has a swap feature. So if you want to buy the Beats token, I would highly recommend using this swap feature over here, because if you use other decks like Spooky Swap or Spirit Swap, you may get high slippage, means you may have to pay more and you will get less of these Beats token if you are willing to buy this particular crypto. Also, Beethoven uses balancer contracts. So if I am looking at their security, which is a very important aspect before investing, so Beethoven uses balancer contracts. So balancer is basically this same thing which I have just shown it to you, but it is on Ethereum. So Beethoven has basically forked their contracts and using it on Fantom X. So what happens is whenever these audits happen for balancer, since the contracts are forked, so Beethoven has not gone ahead and done any further audits for their contracts, and they are basically dependent on the balancer protocol. So this is one of the things that I am seeing, which I don't like it too much. Okay, other than that, if I tell you few key points which I look before investing, is the total value locked. So here I can see 200 million is the total value locked right now, which is healthy, and market cap is at 18 million and the circulating supply is at 21 million. So this tells me and indicates to me that the price of Beats token has a lot of room to grow. It's just that since the protocol is paying out its native token as yield rewards, this is getting dumped on. So if you can see over here, this is the chart for Beethoven token, and there is a constant downtrend that I can see. Here there is a small jump, and post which again there is a downtrend. So what happens is, if you invest in this particular farm chasing this yield, so you have to buy the token at some point. Let's say you have bought the token at $1 and now the token price is at 85 cents. So basically you are exposed to impermanent loss, and that can only be covered up with this high yield. So if you are degen enough and want to chase those high yields, so you may proceed with it. Another strategy which I would like to share, which again nobody shares in this field, is how do I yield farm without getting any sort of risk. So whenever I am in an ecosystem and looking to start yield farming with it, I will first look into any platform on the ecosystem which is providing the borrowing and lending functionalities. So here in Fantom, I find that Geest Finance is such a borrowing and lending platform. So what do I do over here? I have 50 Ethereum token with me, and what I'll do, I'll split this up, and 25 of them I will deposit into this farm over here in Geest Finance at the Ethereum pool. And once I deposit my 25 Ethereum over here, I will borrow some amount in the crypto or stablecoin which I am not very bullish on. So in this scenario, I am not very bullish on stablecoins. So I will deposit 25 Ethereum over here in this pool, and I will borrow some amount of USDC. So let's say I borrow around 12 Ethereum worth of USDC from this pool. And now what happens is, I pair up that 12 Ethereum worth of USDC along with my remaining 25 Ethereum, and I come over here to this particular farm and I deposit my crypto over here. I get the LP tokens, I go to farm, I deposit over here and start yield farming with it. Whatever yield I am generating, I will go over to this swap feature. I will go over here, I'll type in beats and I will type in over here USDC, basically any crypto that I have borrowed from this platform. So I will start selling off to this particular crypto, and since I will start accumulating this crypto, I will again go back to here. I will go back to this Ethereum tab and I will repay back my loan. So that is how I do yield farming, and that is the safest way to do yield farming without buying any crypto or getting exposed to any further downwards price movement. So this is one of my biggest techniques which I have used since many years doing yield farming. So that is it for today, guys. I will leave the links down below. If you wish to check Beethoven out, you can do so. Always do your own research before investing, and this is not financial advice. Also guys, I have made a new Discord channel. You guys can join and chill out there. And this brings an end to today's video. If you like it, show some love to this video as it motivates me to make many more such videos for you.